to mark out the white zones, they don't know how to mark the exit and entries. Okay guys, so in this video I want to show you how to find your perfect exit and how to find your perfect entry. Okay guys, now let's begin. To find your perfect entries, it depends on the time frame you're in. Sometimes if you have entered in the 1 hour time frame, then it means that you are going to exit in the 1 time and you are going to hold for at least 1 hour. If you have entered in the 30-minute time frame, it means that you are going to hold for at least 30 minutes. Okay guys, so now this chart is a 30 minutes chart. Okay guys, now let me first take you through about ZAO USD. So I can first take you through about ZAO USD. This one, it was a failed setup there. So guys, as you can see my charts. So the first time you come to the market, you have to first mark out all the key points. Okay, mark out all the key points. If you come in a daily chart, you have to mark out all the key points. And if you now start with the day time frame, the day time frame is to mark out the key points. Now the 4 hour time frame is to see the trend. Okay, this is a trend line and the 1 hour trend line. So now the 30 minutes most times is for entries, the 15 minutes most times is for confirmation. Okay, so you confirm when your charts are in line within the lower time frame. So the lower time frame, 30 minutes and 15 minutes, those are the lower time frame. Okay guys, you don't need to enter the 1 minute time frame. 1 minute time frame, there are a lot of fake outs. And guys, remember, when you're trading gold, you don't need to, in fact, you just have to be specific when you're trading gold. Okay guys, now as usual, so it's just a simple video for beginners. If you're a beginner, please subscribe to my YouTube channel. Don't forget to subscribe to this YouTube channel. This is the only channel whereby I will teach you how to trade forex from beginner to expert. Okay guys, please consider the subscription button. So now in the 4 hour chart, on your tablet, you can use a tablet, you can use a laptop, you can use anything as long as it is a high gadget machine. So on my tablet here, I can show that gold. So I'm going to first mark out all the I'm going to first mark out the major key areas. So mark out the major key areas. So our major key area was here. Okay, was in this zone. Why this zone? Okay, this is a resistance zone here. So we have a resistance zone, but remember, price came. We have a resistance zone. We have a resistance zone on our left. Price came and tested this zone, leaving a rejection in that zone. So it came back and fell down. Okay guys, so when price came here, tested the zone, its first touch tested the zone. Whenever you're trading, in fact, let me tell you this, whenever you're trading support and resistance, and whenever you're trading demand and supply, is not these things or the following. So every day you come to a chart, you have to look left and right. So you have to see on your left what is there. So on my left, I have a candle left a rejection within the resistance zone or within the supply zone. Resistance can mean or supply zone. Okay guys, so left a rejection. So it means that this weak or rejection, so it means there is a liquidity here. So they are penning orders here, penning orders for sales. So that's why when price came back and bounced off the demand zone, now when it came back, it first break. When it came back, it broke. When it broke the resistance zone, but the candle which broke, it was not a solid buying candle. It never had momentum. So this candle which broke, as you can see, this candle which broke, this is a fake out. Okay, these are fake outs. Okay guys, this is a fake out. This is not a valid breakout. So this breakout is invalid. So what does it mean for you as a trader? Since the breakout is invalid, it means that the market is showing you that we are still in the selling signal. Okay, guys. So this fake out is invalid. Within the invalid fake out has been formed within the resistance zone. Okay, but if this zone had been broken with a solid buying momentum, then and being retested back, then we would have seen that maybe let me first show you here on my graph. Let me show you here on my graph. So I say that price came and bounced off the resistance. When it bounced off the resistance, it came to the demand zone, bounced off, it tested the demand zone. Now it came back. So this zone, it means that gold was just consolidating this zone. So it came back up to this zone, tested here. Okay, but before coming here at the top, it first came here, bounced off, then it faked out. It broke, but with not a valid breakout. So this breakout is called an invalid. It's called invalid breakout, an invalid breakout. So this breakout now, just price has now come back within the zone. So coming back within the zone, you can see that price came back and tested within the zone. So we are expecting now. So when price came back within the zone, it means that we just come. So after understanding that, you just come now in the 1 hour time frame. So in fact, this video, it can also help the beginner traders and advanced traders. Okay, guys. So as you can see in the 1 hour chart, on our left, as I told you, this was a strong resistance. Since it was a strong resistance, as you can see, price went down over 400 pips. Okay, price went down over 400 pips. It's a strong resistance. As you can see, it fell down 550 pips. Okay, guys, on gold, price fell 550 pips. So 550 pips within, we are playing in the zone of 5. So it means that for you as a beginner, you just have to wait for a confirmation. So how do you find now? So now let us go. How to find confirmation and how to find your entry now after marking out the zones now. So your confirmation mostly will confirm in the 30-minute chart and the 15-minute chart. Okay, guys, just come. We are going to confirm our entries. When we see this pattern like this, let me show you. Let me show you this pattern. Let me show you. Let me show you this pattern. So I want to see, if I want to sell the market, I want to see something like this. Something like this. Okay? Something like this. Okay? Something like this. Something like this. Okay? So, like this, sort of this thing. Or another thing, I want to see this pattern. Okay, guys? I want to see this pattern forming like this. Or I want to see an double top, but with a descending trend line. Double top like this, forming like this. Or forming, collecting all the liquidity, or coming back like this. Like this. Okay? This is what I want to see on my, this is what I want to see when I'm looking for my entries. Okay, guys? So this is what I want to see when I'm looking for my entries. So I'll come. So I'll come, as you can see. So we are going to find our entries. our first entry on gold was around here. Guys, I told you 30-minute time frame and 15-minute time frame is for confirmation and entries. So the 30-minute chart formed a double top, as you can see, formed a double top. After forming a double top within the resistance zone, it started dropping down. So it means that our selling point was around this zone. It was around 3392 and 3384. So this was the selling zone, and our stop loss was above 3342. Okay, so you sell at 3392 and 3342. So it means that you were going to risk your 80 pips to make over 200 pips. Okay, guys. Yeah, to make like 300 pips. Because from this point, 86, this is 86 minus 64, so that's around 300 pips. So you are going to risk 80 pips just to make 300 pips. So as simple as that. If you're a beginner, you just have to look for the M pattern. Just look for this formation. You just have to look for this formation. Come, fake out, come, you just have to look for this formation for entries. Okay, guys, you don't have to make trading hard for you. Don't make trading hard for you. In fact, trading is not hard. So as you can see in the 15-minute chart, so a double top was formed. Okay, a double top can mean M pattern. It's like this formation. You only have to look for this formation for it to be safe. Okay. So you only have to look for this formation for you to be safe. Okay, guys, as you can see this formation. Now just imagine if this formation again forms here, okay, guys. So that is it. Okay, you only have to look for this formation for it to be safe. So after finding this formation, so you come, then you go short. So this is a bearish. Okay, it's a bearish momentum. A bearish engulfing bar was formed together with a confirmation candle. This confirmation candle, this is indecision candle. This is a Doji formation within the new resistance which was formed. So you just come and measure. You just come and set your setup like this. Then your take profit is within the nearest support, and your stop loss is above the resistance zone. So your stop loss is above the resistance zone, your take profit is above here. So every time you come to the market and you see this pattern, guys, don't be scared to enter, okay? Because in trading is about so this is 240 pips, and you are going to risk you risk 80 pips to make 240. So the risk to reward, if you can see the risk to reward was 2.56. So 2.56 is a good risk to reward ratio. Okay, guys, simple as that. So thank you very much for watching. Please consider subscribe the subscription button So guys, we meet.